this latest upside has been probably more short covering than outright long positioning.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Welcome aboard as we take another look at the markets. Well, here we are at midweek. It's Wednesday. It's time to check in with Joe Camp of Comstock Investments. And we'll take a look at what the market held for us on Wednesday's trade. And it seems like we didn't have too many winners on the ag commodity trade, Joe. The corn may have gotten a gold star, and maybe the hogs, by and large. A few feeder cattle contracts had plus signs, but other than that, it was not necessarily a great day. How come?
That's right. You did mention hogs, and rightfully so. That is a positive storyline that you're making new highs for the move, and we can recap the relatively bullish optimism there. But hard to find much of a motivator for these other ag products. You did mention corn holding up there, and that would be a flip of yesterday's losses. The corn did have the more bullish input of the flash sales, the export numbers that come out on a daily basis. If they're more than 100,000 tons, there were two of those such sales this morning, both to unknown buyers. And it's a continued source of demand that runs much better than we had in many cases feared. And it is a reversal then too of yesterday's crop report reactions, where corn was the leader lower after being higher before the report, down afterwards. Not outstandingly bearish in terms of that report, but leaning more negative for corn than anything else. And now today it was the soybeans' turn, after looking more resilient yesterday after the crop report, to now on Wednesday's session today being the anchor for everything. That related to a couple of items, like we're continuing to track this better weather generally in South America, the advancing harvest in Brazil, Argentina, and some better weather there, along with connections to these stories about China buying from Argentina on the soy side. And then beyond that, the other big input, I think, of the day today would be the lower bean oil and all that's going on politically with renewable fuel policy. There are these budgetary hearings going on this week, and we know that so-called 45Z clean fuel credit, as it's attached to the Inflation Reduction Act, is in the crosshairs of the new administration, given that that's the Biden era IRA, Inflation Reduction Act. So a lot of moving parts, but not too much out there that was positive, as you mentioned today.
Do you think our soybean export window has closed to China for the season now?
It generally has. I mean, you're going to see likely a few purchases here or there, but the seasonal nature of it is the fact that that Brazilian crop is filling the pipeline. And for as much as we talk about harvest delays, and we get that input from Matthew on what's going on there, the rest of the country outside of Mato Grosso is far enough along, and they're close enough, those western and southern states in Brazil, to the export channels, that beans are ready and beans are shipping out. And it's enough to make up for what was weighing on the market as we came into last week, which were these new estimates that February will be a record month for soybean exports out of Brazil. And then when you throw on to the mix this talk that China is buying actually beans, not just meal, but beans from Argentina now, that's a bearish component for U.S. competition for sure.
Well, the soybean market definitely looks like it took out the uptrend line. That looks pretty bearish on the charts, longer term on the daily chart. Corn, maybe not so much. What do you see for upside potential in the corn? I mean, are we kind of running out of gas, do you think?
It looks like we are. And you have to be careful because, being just yesterday, right at those recent highs again, and even after the slip lower and the mild recovery, not far off of new highs for the move, yet we're still not seeing that momentum that we would expect if things were all cylinders go on the bull side of things. And so you can be said that those speculators, the commodity trading funds, are indeed defending their positions, but they're not necessarily adding to them at this point. They've amassed a net long that's 375 plus thousand contracts in the corn market. It is short of the record from 2022. But right now, given the technical slowing of this momentum and the potential topping pattern that's coming into place on these charts, we're now inclined to wonder if there's going to be some more profit taking liquidation on the speculative end. If it's going to keep going, then we all of a sudden need to see a quick boost and some rising volume and open interest and some indication that we are clearly holding this support for now the heaviest open interest contract May holding above $5, which it was back and forth testing so far this week.
A lot of folks have been very concerned about that corn market being top heavy with all the heavy fund long positions in the market there.
It's not necessarily something where the trend is going to flip, but we could see a correction of sorts, and this being a correction within the secondary uptrend. The broader primary trend is overall from the 2021-22 highs still down, but corrective in nature that we could drop 25 cents towards, say, about 475 and still be at the bottom end of this uptrending range that we've been in since the late August lows. And to put it into perspective, we continue to remind everybody about where we've come, up $1.35 plus from that August low on a continuous basis. And so there is this idea that we could take a chunk out of that, but still be generally building an uptrend. And so that would go back to the speculators and their decision making, where they might take some profit but not necessarily turn bearish at this point.
On the March soybean chart, I see where we're testing the 100-day moving average now, and just kind of testing that for support. Is it pretty critical that that holds or not?
That so far it looks really rather critical to talk about defining the broader uptrend that we've been in. Then on soybeans, it's not been as long of an uptrend forming in beans as in corn. I mentioned that August low. It was only about 6 or 7 weeks ago that we were bottoming out on the bean charts here. So that's the first level that we see right away. Those moving averages that are being given up here in a hurry when you have days like this where you're down double digits. And so you can talk about potentially 1050, but not much else, now below the market until you get to that critically psychologically important $10 mark.
Well, the wheat market was actually looking much better for the last month and a half. And now for the last, 3, 4, 5 days now, it's gone down. It looks like maybe at least a short-term top in that market. What do you think?
Yep, it's similar to corn where we're seeing a solid run lately, but not then all of a sudden the follow through, but maybe opposite from corn in the sense, though, that this latest upside has been probably more short covering than outright long positioning. And that's the case because unlike corn with the big net long that we mentioned, the hedge funds are still heavily net short and have been net short for some time on the wheat. And so getting out of those positions and stepping to the sideline has meant closing out shorts, but there isn't necessarily the indication, whether we watch those basic momentum studies or the relative strength and or the open interest and volume, to suggest a lot of fresh buying interest. And at this time, that would make sense because there's not a real great storyline out there for wheat, other than the unknowns of Russia, Ukraine, and competitive factors on the export front. We're in dormancy in the midst of this U.S. winter wheat crop, and still being a long time before that provides any guidance, and just lacking, I guess I would say, fresh input relative to the other markets on wheat.
On livestock, the entire cattle complex at one time or another was on either side of unchanged. Late in the session, the live cattle trade finally kind of gave up the ghost, and most contracts went underwater. They were down, showing negative signs there across the first several contract months there. So what's going on with the cattle complex right now? Is it in dire straits, or is it a
So far, a correction, and it has to be linked to what we're seeing in corn as well. And this concept of the speculators and their decision making after having run up that market on the back of really huge, in the case of cattle, record net longs. Both live cattle and feeder cattle reached in January new record net longs. And so to see these breaks for futures lower, and it can be on the back of various news items, whether it's bird flu concerns that entered the mix was enough to spook speculators into stepping out of the market, or you have the reopening of the border with Mexico on feeder cattle imports, possibly pressuring the mix, and then some of the negativity where we're back on track, at least for now, on the meat trade with Canada and Mexico and that relief related to the tariffs. But ultimately, the uncertainty just not encouraging those speculators to continue building their bullish bets. And like corn, it may be that they're eager to defend these positions, like we had observed at the start of the week, Tuesday coming into now today, where you have these little upside tries, but it's not the market of 3 or 4 weeks ago, certainly, where those positions were being pushed higher. It's get out, maybe by the breaks, but not to the same extent before. And so that type of action has led to what is technically a slowing down of this sharp uptrend and making it now more vulnerable to start to catch some additional stops for those longs, and to potentially also encourage some new selling, some fresh selling into the mix that we haven't seen now in the cattle for several months.
On April live cattle, looks like we're just testing that long-term uptrend line that goes all the way back to last August.
Yeah, so that those the technicals are going to be important for the decision making on what these speculators do. Certainly, same with how they're queuing in on the outside financial markets, the stock market under some heightened volatility, the reaction to the consumer price index report, and the fact that inflation is still running rampant. That doesn't really encourage a lot of bullishness when we're still worried about inflation and about the consumer and the effect that a lower stock market might have overall. So the technicals are very important. It's also important just to get back to the fundamentals. As bullish as the underlying supply and demand components still are in this market, we're past this point that we've been looking forward to for so long, which is that the January contract is already settled out. There's a time now before the next nearby feeders come up into expiration, and now the February live cattle contract. You mentioned April because that's the most active contract. Our February position is in delivery, and so it still leaves open that matter of convergence. But it's not the same type of upside support as it was when we have been looking at cash bases out there, some $8 to $10 premium over the futures, and so it's not the same motivation again for cattle that we had 3 weeks ago.
Seems like the jury is still out on if we're developing a head and shoulders formation or not, huh?
Yeah, and that can still be possible again as we now test that down line of the uptrend can still be formed. One, as you bring it up, head and shoulders pattern that was negated so far has been the hogs. Circles back to how we mentioned they were higher. They did poke out to new highs for the move, and as much as we talked about declining momentum studies and the failure to make new highs, they were able to get past that. And so that can be the pattern too for whether it's cattle or corn. As much as we want to say things are slowing down, if we get that big spark and an up day that clears us to new highs, then that money can return from the long side in a hurry.
Am I correct in seeing on the hog chart, it looks like a gap higher?
Yeah, all of a sudden a surge with new money here opening up what could be a gap of exhaustion. We'll keep that in mind. But for now, a more bullish trend, given that the futures were able to hold the majority of these gains today on pretty healthy volume, and recently the rising open interest. That's a recovery back towards a much more bullish leaning for that market.
I mean, it came within a whisker of possibly setting up an island top, which would be crazy bearish, but it didn't quite do that, I don't believe. but just something to watch anyway. Just wanted to point that out. I'm glad you mentioned that about the CPI numbers that came out. They really, for a while, turned the equity markets into a tailspin. They did recover later on. Are the livestock futures going to be kind of tied to that now, do you think?
I think increasingly so. Again, there was I think several months where we'd taken a break from really caring a lot about what the stock market was doing, even though it was marching towards new highs and was underlying a source of support. There wasn't that same seemingly day-to-day influence that we can have going forward, at least in the short term, because of all of these developments that are going to open up, whether it's the consumer price index report today, the producer price update tomorrow, and the lead in to the next Federal Reserve decision on interest rates, all along to the political input and the reactions to what we're doing about the budget. And then those talks that I mentioned are going on this week, and how that's going to potentially tame inflation and or keep it stubbornly sticky high like it is. For now, the feeling was, as we saw the turnaround, that it's not the greatest picture for consumers and consumer sentiment when we're just now coming off of these record highs for the market.
And of course, tomorrow morning we'll be getting the weekly export sales numbers from USDA, so that'll be interesting too, and we'll be watching for that. Joe, thank you for taking some time and helping us navigate what happened on a Wednesday. Appreciate that very much. Joe Camp with us. He is with Comstock Investments. That'll do it for this episode. For our producer, Breanne Jenkins, I'm Marlin Bohling, and we'll catch you next time here on the Comstock Channel.
Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.